Good evening, ladies and gentlemen, and welcome to Sky International Center's educational series of panels. Tonight's subject is real estate investment and development and strategies in 2021. We are of panels, Europeans in Boston. We have over 14,000 members. If you're a member, please welcome. If you're not a member, please join us. You will have the link up there. If you're joining us on Facebook Live, it's above the live stream. If you're joining us on Zoom, it will be in the chat a little bit later. We are excited to be presenting to you an international panel of experts in real estate. And it's especially a pleasure and honor for me to introduce the founder of the Sky International Center. Herself, she's also an expert in real estate development. She's an investor and landlord, Natasha Sky.
Thank you so much, Olga, for such a warm introduction. I am honored to meet Olga not only through the business world, but through the event, guys, that was especially memorable for us. There are a few ambassadors who came to MIT, to Cambridge, and Olga was singing as an opera singer. And here we are. I would love to introduce you. Not only she's a renowned world opera singer, Olga also is a partner for Sky International Center. And I'm very honored to have you, Olga, on board. And now our incredible panelists, not in particular order, guys, but we would love to introduce you, our panelists who are present at the moment. Ella Goren. And Ella Goren represents a really interesting company who she created, Sunrise Investment. And Ella is not only an owner of this company, Real Estate Investment, she's also my personal friend for many, many years. Probably, I think, Ella, about over 17 years. So not only she's the owner of the Sunrise Real Estate Investment, she's an experienced real estate investor developer for over 15 years. Ella is renovating single homes, multifamily. She's doing condo flips and conversions in East Boston, especially. That's her area. In Somerville as well, Brighton and Chelsea. This is her upcoming areas where she's really grabbed her market on. Ella also worked as a software engineer for the past 20 years before she joined this real estate venture. And she's following her passion now for creating beautiful homes, especially funky open spaces. And she's really working in the upcoming areas of Boston. And I have special spot for Ella, not only that she's my personal friend, but also I remember, Ella, our conversations when she moved from the software development, and I encouraged Ella to join real estate team. So I'm very honored that I was able to steer you to the real estate, and here you are. Welcome to our panel. Okay, Olga, would you be kind to introduce our next panelist and dear friend of mine, Susan Armand?
With great pleasure, and especially it gives me even more pleasure to introduce Susan, because she is a colleague of mine. She's an amazing mezzo-soprano, and she was a professor at Boston University for many years, 20 years, I believe, Susan? Is that correct?
17, actually.
17. Almost 20 years. And Susan is an agent who has lived in Brookline and Boston and sold real estate for over 20 years in the Boston metro area, including Brookline, Newton, West Roxbury, and beyond. She brings a wealth of knowledge and experience about buying and selling homes and condos and investment properties. After 17 years of teaching at BU, as we mentioned, she continues to enjoy sharing her knowledge through helping clients. Susan focuses strongly on real estate investments, even when it comes to buying a home. She has also been recognized as certified as a negotiation specialist. We would love to talk more about this when you have time to speak about this, because this is very important, all these negotiation strategies, especially in the market this year. And Susan published a book, Risk versus Reward, a simple guide to investing in real estate. And the link to her book and to her email and website you will find on Facebook in our event and Europeans in Boston. Welcome, Susan. And last but not least, we have Paul Shaughnessy, a mortgage specialist. Paul is a Malden native and has extensive experience in the private and hard money lending industry. He has partnered with hundreds of investors and has originated in excess of $200 million in rehab, construction, and rental loans. He currently serves as the SVP, Senior Vice President of Lending with Renovo Financial for the Massachusetts market. Welcome, Paul and Susan, and we are about to admit Pamela to our panel. And Natasha, you wanted to introduce Pamela. We'll wait a couple of seconds for her to set up her video and audio.
It would be my honor, guys, and I'm going to show you a little book that just came up on the market 2 days ago, and the book called The Cracking Rich Code. And Pamela is absolutely an amazing author to be the youngest one, probably. She is in her 20s, and she's already featured as co-author with Tony Robbins, with Jim Britt, who is a success coach and who was on a team with Jim Rohn. She also is co-author with Kevin Harrington, which is, the representative from the Shark Tank. So we have an amazing panelist today, and we would be happy to give you the news that Pamela is kind enough to give to our members and the panelists the link to download this book for free. And so is Susan, is very kind to give us the link and the copy of the books. So please ask them directly, or we'll send to the team of Sky International Center. And I think, Olga, we would love to start with the questions. So,
Pamela, I'm sorry, Natasha, can you please, being a host, can you turn on Pamela's video? If you go to participants, you see Pamela Bardhi. She should be.
We accepted Pamela. I see Pamela. Let's see. The video is on, you're right, so we muted, forgive me guys, I am actually new, I'm really good in real estate, but as you can see, so we're gonna put we can make a host. Now, can you see us, Pamela?
I can
Hey,
see
hello,
you.
beautiful.
Hello.
Welcome.
How are you? I was like, what happened to me? Where am I? I don't know what's going on.
Officially accepted to the Sky International Center. Welcome, and you know half of the team. So, Pamela, we were just talking about how amazing you are, and I hope you've heard that we introduced your book, Cracking the Rich Code. So
I heard you, but I couldn't speak. Thank you so much. That's so awesome. I love you. Thank you.
We love you very much, and we love your energy and how energetic you are. And if you'll forgive me, I'll introduce you as part of our amazing panel. So Pamela Bardhi is Albanian by the heritage, and we have just would love to run quickly that Paul Shaughnessy has Irish heritage, and Susan is the only representative as of today from this beautiful country of America, and she has Jewish heritage, and Ella as well, and she is from the country of Russia. I am Ukrainian, and Olga is Ukrainian, and as I mentioned already, Pamela, least but not the last, is from Albania. So Pamela is a 9-figure real estate entrepreneur and the founder of the several businesses. One of the real estate business, her baby, is the Mosché Group, Mosché Construction, Mosché Development. She's also created with all of these companies with one mission in mind, to improve the quality of life for all of her clients and others, and including her family. Pamela is also the host of the Apple's new and Noteworthy podcast, Underdog, which is currently streamed in 45, did I say 45? 44 countries, right?
45 now.
45, yes. So Pamela's mission through the podcast is to empower her underdog in you, in all of us, in people who overcome all challenges of life, not only real estate challenges. And her education background includes the Stonehill College, the Babson, and the lovely Boston alma mater, Harvard Business School, or Cambridge people would say not Boston, but Cambridge. So Ms. Bardhi now has been featured in Time Magazine, Forbes, among the other media, and she's engaged. She's getting married.
Wow.
I know. So everybody, please welcome our panelists. And the last, Olga, can you please kindly welcome all of our members from Sky International Center?
Thank you.
Thank you so much. I see some members have joined and I see already comments on Facebook. Speaking of, please comment, please ask questions. We will be monitoring both the Facebook account and the Zoom. You're welcome to put your comments in the chat and we'll be happy to read those questions to our panelists. And now on to the first question. Who is the lucky one? Natasha.
Pamela, I received the question this morning that came for you. Where's the link for the book? Because we announced to some of the clients, so we'll ask you to put in the chat.
Yeah.
The link to download, number one. And the question right away came for the real estate developers. So the first question is about where are we going, Pamela and Ella, in the real estate that is booming at the moment, like flying like hot pancakes. Where are we going with all this exposure? Pamela, we'll start with you because I received for Pamela a question, and then Ella, the question will come to you as well.
Absolutely. So I'm also going to throw this question on to Paul because he actually funds all my deals. So without having the lenders back you up, there is no real estate market. So shout out to Paul. But seriously, I honestly think that the real estate market is due for a correction. It's been due for some time. I mean, prices are just at a point where it's just unsustainable. Yes, interest rates are low, but also prices are extremely high. So it's kind of like not really a win-win situation. I mean, I'm hearing people, I actually heard yesterday that people are offering $80,000 to $100,000 over asking price, which just like blows my mind. As a developer, don't get me wrong, I love this. This is great. But I'm just saying for the, for the people out there for trying to buy a house or, for a family, it's really, really difficult. And it's like, you're getting to a point where it's like, how can it sustain, right? How can it possibly continue on the trajectory that it has with such high property appreciation? And it's almost like unreal, right? Like, it's like, where did this money come from? Like my parents' house in the last 2 years appreciated almost $200,000. Like, that's just, how is that going to happen in another 2 years? I mean, like, what's gonna go down? I mean, it's all something that we're all watching, but I do know from a development standpoint, material costs have gone up well over 100%. I mean, you're looking at a piece of plywood that's almost $100 right now, which is insane.
No lumber. There's no lumber.
Right, because the demand is so high. So I mean, all these things are spiking up, and I'm just wondering, how long is that going to maintain? Is it going to go up any higher? And are we going to crash and burn after that? I don't know.
So
it's a mystery, but I think it's true.
Yeah, it's time for corrections. Paul, what's your response in the financial world?
I mean, we see a lot what Pammy's saying. Obviously, I mean, it's no secret. Lumber costs have gone through the roof. I think we read a statistic the other day. There was 377% increase in lumber prices over year, which is absurd. And you have interest rates very low, demand very high. There's tons of qualified home buyers out there. So as an investor, you're constantly competing against the regular home buyer. So it's challenging to get a cosmetic, like a lighter cosmetic rehab deal nowadays. You have to have some sort of value add component, whether it's a structural rehab, a condo conversion, and 9 times out of 10, it's got to be a gut rehab if you want a good deal on the property. So it's tough. I mean, I think I too do not think it's sustainable. I don't think incomes are growing fast enough to keep up with this type of appreciation. And at some point, the affordability index is going to trigger that. We're obviously red hot, and it needs to correct at some point. So it's definitely, I think as an investor, you really have to do everything you possibly can to try to buy it right and buy in a good location. I think it's very if you want to go far north, far west, I think it's going to be very difficult for anybody to, you know, if it does correct, it's going to be challenging to get out of a deal if something ever does happen. So it's just being very methodical in your approach and where you're looking to invest. And I think that matters more than now than ever. It's just buying it right and buying location right.
So to sum it up, Paul, if you would have a magic wand, when do you see the correction will happen, and when do you see, Pamela, the correction will happen? At what point of 2021, 2022, just to give an idea to our listeners?
That's a tough question. You know, we all saw the inflation meter come out last week, and it was a lot higher than what we all expected. And I can tell you, I was in Miami last month, and the second I walked in the airport, it felt like a nightclub, and I couldn't even move, right? And I was like, wow, this is absurd. And granted, there's a lot of pent-up demand, but all that pent-up demand drives up prices higher. And in turn, at some point, the Fed's they've verbally committed to obviously keeping rates low through the end of, I think, 2022, beginning of 2023. But I don't know if that's going to be able to happen given all this demand. You know, obviously pent-up demand drives prices and obviously decreases affordability even more. So if that does happen and rates creep up a little bit higher, it's going to slow home buying demand a little bit. I mean, we're still record low interest rates, granted, but you never know what can happen if they raise rates a full percent. I mean, that's a big mover. But we'll see what happens there. And then on top of that, you have moratoriums and all that in place, and it hasn't fully ended. So you have pent up foreclosures in the background that we don't really know how many homes are actually going to get foreclosed when this does end. But the good thing on the offset, you have a lot of equity in a lot of homes that are built over the last few years. So chances of a massive correction, I think, are unlikely. I think it's going to be a lot less than 08, 09, because you know, people are going to be able to get out before they get foreclosed on due to the amount of equity they have, and they can negotiate their short sales, sell to investors like everybody on this.
So what you're saying, Paul, that we're not facing 2007, 2008, a horrible situation, because we're back down we have the great backing this time by the government because of the pandemic, of course. And number two, we have a lot of equities that people perhaps moved a lot from stock because of the certain instability. Stocks are doing also better than expected, but we certainly believe, from my perspective as a developer, I can absolutely foresee that the price will correct, but the real estate will be strong. And Susan, you have great experience in many years. You've seen ups and downs in real estate. What is your perspective on this current situation?
Honestly, I think there's a big difference between house values right now and versus condos and multifamilies. What I'm seeing is this enormous upswing in houses. People are paying up to $100,000 more for a house because they're moving out of their condos and out of the towns and trying to get land so they can raise their children more comfortably if they're stuck at home. But realistically speaking, what we're seeing with condos, since COVID began, it's much slower in selling than it was before. During the COVID period, their condos were sitting on the market for quite a while. For example, in Brookline, all of a sudden we had quite a long time on the market for the condos. Right now, the condos are going at asking price and a little over, but it's not as significant as the real estate market. And in the multifamilies, for example, I do a lot in East Boston, South Boston, all of Boston. And what I'm seeing is last year, when a three-family was 1.1 million, people didn't want to spend that because they thought that the market was going to go down. But now they'll spend 1.1 to 1.15 for that same building. So in fact, yes, the market is going up in pricing in multifamilies. However, it's not as significant as one would expect.
Thank you. Olga, would you be kind to share the screen that Susan shared with us, the projections for the real estate in condo versus single family homes?
Can you hear me?
Yes.
Okay. Before I do that, I want to welcome some of our members on Facebook. Natalie Dumont made a comment. She said that she was talking to a real estate investor last night who offered 6 million more for his last purchase that was originally listed for 27 million. So that's something. Natalie, hi, thank you for watching. And also we have Semi Spahilari. He's on the board of advisors. Hi, Semi, thank you so much. He's a mortgage and financial advisor. Sorry, he's a financial advisor. So yes, I will be happy to share the document that was provided to me by Susan. And just 1 second, let me find it.
And I'll say that I can provide lots of stats if you need them. Just send me an email. This was the regional reports for Boston Metro and then outside of Boston Metro. So you can see on the third line, Boston is being discussed in general. And in other lines, some of the other parts of Massachusetts. So this is a good overall statement, and it shows pending sales, median sales, which means the center of the price point, and then the total volume. What we're finding in general is there's just not sufficient inventory in any category. And pricing, depending on pricing, if the agent is smart enough to price it a little lower and let it be competitive, it will be competitive. Today, it's almost guaranteed, especially with homes. But condos are not as predictable. I have many colleagues who agree and disagree with me. We discuss it all the time. But what I see in the stats is the condos are not jumping up in price. They're going a little higher than asking, but not outrageous.
Thank you. And Ella, since you're developing a lot of condos in East Boston, what is your view on condo development?
So yeah, I am exactly in Boston, in East Boston, as a matter of fact. So we do see some slowdown in the condos, and they were on the market. In our condo, we're waiting until their lucky time this spring from the last spring. So whatever we couldn't sell, obviously before COVID, we sold recently. But yes, there is a slowdown in condos as of right now, but it's expected all to come back because people are still going to the cities. And actually, I just came from 3 days of Urban Land Development Institute conference, which I patiently sat through 3 days, listening to all the researches, all the projections. And a lot of questions were raised about cities. And basically, everybody simultaneously were saying that cities are coming back. It's still picking up slowly, but they're coming back because businesses are coming back, because all the fade about working from home really didn't prove itself, because neither only employees don't want to sit home 100% of the time, nor employers want their employees to be home, not because of the inconvenience of work, but also because of the general spirit of the companies, of people working together, being friends, having coffee. And so everybody wants businesses back. The moment it's happening, actually unemployment ends and people getting all back. So cities are projected to go up. And specifically, Boston wasn't even in question, because Boston even did not consider to go down. They talked more even about hubs like Manhattan, San Francisco, Los Angeles, who had a more significant impact than Boston. Boston actually had a migration even during COVID. People from Manhattan were migrating to Boston, from Seattle migrating to Boston. So we are lucky from real estate perspective to be here in a city where so many universities and medical places and schools and everything, and we have an ocean on the one side. So we really have nowhere to grow more than just, use our spaces smartly and develop and redevelop smartly and design the best way we could. So we're expecting next spring cities will be back, and we're building a lot of condos. We have 20 condos coming up next season from our company.
Wow.
So we are optimistic. We are building and designing with a notion of mind of more rooftop decks, more balconies, more office spaces, more rooms, basically. So we had to adjust a little bit our design plans based on post-COVID.
Sounds great, Ella. And from my point of view, what the value that you're interested in offering to our clients and to members of Sky International Center who are listening, you're also, I understand that you're offering real estate development and short-term real estate investment program to our members. Can you please elaborate on that?
Yes, absolutely. So a little bit about us. We are two companies together. We are development companies, Sunrise and Ligi Construction. My partner is a general constructor who is also a commissioner of local town. So we're building our project. We have 3 ongoing projects, big projects, and Paul actually our lender in 2 of them. So we're happy to have him. So we're using various ways of funding. We're also running private investment programs, which was mostly our friends and family, and we recently expanded it a little bit, which is fixed interest, short-term investment, which is between 1 year or 2, which so our investors become members of our LLC, and they don't have any liability, but they get fund distribution before us. So there is a special way, and I'm happy to explain to interesting parties how it exactly works. So it's a fixed 15% interest. So you can invest in real estate with a fixed interest in secure way without getting all the headache of buying the property and deal with tenants, etc. So we're welcoming. We have a lot of investors who are staying with us for a very long time. So that's what we do.
Thank you so much, Ella. Pamela, thank you, Ella, for giving our clients an option to invest in real estate without the headache. And I guess we as developers get the headaches. So Pamela, please tell us about your projects and what are you particularly investing in right now? Because from my understanding, you have been investing in single families, and tell us about the areas that where you invest.
Yes. So remember, everyone who's watching this, the riches are in the niches, my friends. So focus in on your specific area, know it, own it, and do it very well. I focus specifically on West Roxbury, Hyde Park, Rosendale, and Dedham. Those 4. That's pretty much it. You won't really catch me anywhere else. Riches are in the niches. Anytime I've stepped out of my little bubble, that bubble has popped. So I am not interested in anything outside of that. I focus primarily on like 1 to 4 units. That's my jam. So I like single families. Those are fun. And then anything that's like a 2-family or 3-family, I tend to, or 4, I tend to do condo conversions. I love rehabs because I love to restore character on the homes, but modernize them just a smidge. However, now I am stepping into like the new construction world. So that's going to be a whole nother ball game. It's Natasha, you're going to have to hold my hand through this, yeah. but so I'm excited for it. But that's primarily where I invest. I find that the success is if you have a very specific strategy in your game and you're in specific locations. If you try to be a developer and invest like everywhere, probably not the best idea. I've seen people lose their shirt that way, and you also can't focus and your time is scattered and projects become a mess. You can't keep up with your guys because you have one project here and another project 45 minutes away. So for logistical purposes, that's why I keep my locations very central, because if I have everything in one place, I'm like, oh, you're at this project. Okay, good. Now you can go 2 streets over and go take care of that one, so for efficiency and logistics, that's the way I roll. But yeah, that's what I've been primarily focusing on. So right now I'm working on rehabbing a 3-family, actually in Brookline. It's part of my investment portfolio. I have a 5-unit building in West Roxbury that we're actually, we just did the exterior and it looks beautiful. And just put a single family on the market in West Roxbury as well. So that is currently active. I have a new one coming on, and then the new construction projects. So 1 to 4 units, my niche. That's my arena. But I have some pretty scary numbers if you guys are interested in hearing them regarding the housing situation.
Absolutely. Go ahead.
All right. I hate to burst any bubbles right now, but it's important to know this. Distressed residential and REO loans jump up by $12.3 billion. Let's see, what else? What else is another one? National Low Income Housing Coalition has estimated the amounts of back rent owed to be between $50 to $70 billion. And in commercial real estate, roughly 430 billion of commercial real estate debt comes due this year in 2021. So those figures are a bit telling, right? Because we haven't seen the effects of COVID yet because we're still in it. So I think it's gonna, in terms of timetable, we're probably a year or two out. So I'm speaking to the developers and anybody who's thinking about investment right now. Think about recession-proof opportunities and be very careful with what you invest in at this very moment right now, especially if you're thinking about doing new construction, because your prices may change a year or two from now. So just to make sure you allow yourself room for contingency, you're not overpaying for deals, because you probably lose your shirt. I don't know. These numbers are pretty scary, both in residential and commercial markets.
Now, Pamela, not to scare our female listeners who are listening to our Zoom and panel, wherever you guys are on the panel's Facebook, look at our panel. There are 5 women and 1 man. Paul, it's an honor to see you, but what a change, right? For a change. So I actually personally invite anybody, men and women, to invest in real estate and not to be afraid of the challenge. The challenge is always there. If you guys look statistically through the history of the United States rates, we've never seen such a low historical rate ever. I mean, ever. Paul, please confirm, in the mortgages that we have on residential, we've never seen 2%. It's just incredible. But you're right, Pamela, it does not mean that it's going to stay, number one. Number two, even if it will go up, it doesn't mean that it's such a bad change. So I encourage everybody who listening here, please look at those beautiful faces and listen to their beautiful voices.
And we do have a question coming from one of our members.
And ask the questions.
Yes, the question is, how can we contact Pamela and Ella and Susan when they wish to invest or receive an advice? Would it be okay to write a personal message to you?
Mm-hmm. Absolutely.
So after this is over, we will put everybody's information, all of your websites, in our event and in the group. And people, audiences, those who are watching on Facebook and those who are watching here on Zoom, please feel free to friend our wonderful panelists and contact them directly.
All right, guys. And now back to questions for Paul, right? I have a question from Paul, from one of our board members. A question for you, Paul. Most people don't understand the difference between, or don't know. If you can please tell us the difference between the private money, the shark money, the bank's mortgages and investment, and tell us about your particular company and what you do.
Yeah, no, I'm happy to address that. I think it's a great question. So I'm really an expert, I think, on Massachusetts and the different types of funding in Massachusetts. And there's really, at the end of the day, there's really kind of 3 primary buckets or types of money here. You have bucket A is really your bank money. So banks are known to be very conservative, but they're also cheap, and but sometimes there's a lot of red tape and hoops to jump through, especially as an investor in a market like this. You have to move quickly. So a lot of times investors look to alternative solutions, and that's kind of your private and hard money type buckets. And that leads me to talk about kind of bucket B. So bucket B is really like your local old school hard money lender. Maybe it was in, a high net worth beneficiary who just has a ton of money laying around, or it's a small debt fund, and they're lending their money out with a lot less red tape involved, and it's mainly asset based. So they don't look at credit, they don't look at financials. They're really, all they primarily care about is the asset for the most part. And with that type of convenience and flexibility and a lot of leverage against the asset, you usually pay for that. So there's usually a premium with those localized type hard money lenders or private money lenders, and they're around 12% or so, and it can be pricey, but the convenience is there, and you kind of pay for that. And then bucket C is like your national hard money lending company, your private money lending company, and these companies started to emerge really in the last I don't know, 7 or 8 years is really when it started to become more streamlined and more popular in the industry. And it's really just they have institutional money behind them, and they're leveraging Wall Street to offload their loans. And so with that type of institutional funding behind them, there's, you know, the money is usually a lot cheaper, but there is some red tape to jump through. It's not nearly as much as a bank. And the benefit of a national type private money lender is they understand the construction industry, and it's not, you know, it's not it's not a very difficult process, if you will. And what I guess so those are really like the 3 different types of money in Massachusetts specifically. And that holds true for other markets also. But I think, you know, when it comes to myself and Renovo, where I represent Renovo Financial, we're kind of a hybrid between the old school local lender and the national lender. And the reason I say that is because we're local. We believe that real estate is local. You know, in different markets, house values can vary street by street. And I think a lot of us know that, especially as investors. And knowing the local market, knowing things street by street, understanding neighborhoods is very important in this industry. So you get that type of local knowledge, market knowledge, and the convenience of being local. I meet with a lot of my clients as well you get all that at national pricing. So I think that's probably how I would describe Renovo. And what it is that we do, I mean, we originate short-term investment loans and also long-term investment loans for 1 to 30 unit buildings. So anything residential for the most part. And we also operate and accept mixed use buildings also.
Excellent. And from my understanding, told me before this panel, I didn't know that you work already with 2 of our members of our group, which is Pamela and Ella. Can you tell us, Pamela and Ella, how did you hear about Paul? Or Paul, did you approach both beautiful ladies? How did this happen? Business transaction or recommendations?
I can speak. It's actually very, very funny because Paul was chasing me for a long time. He actually persistently was leaving me messages about the local lender. And I was brushing it off because I get messages left and right because our buildings in every street and it's Boston numbers. So whatever, somebody calling, I keep brushing. And then it was the evening, we were sitting with my partner and talking, we need to get maybe somebody quicker because after being a very long transaction with the bank, very long, taking all of our time instead of building, I'm like, we need somebody younger. We need somebody, on the ball, moving, understanding, like where is this our lender? And then Paul called again, maybe 10th time, next day. And I was like, So it was thank you, Paul. It was really persistent. So then I thought, actually, that's interesting. And then he challenged us. He said, listen, I need to know about you. I need to meet with you. I need to talk to you. So we actually had to spend an hour, me and my partner, telling him our stories. Like, seriously. But then, so we actually created a relationship with him, and I was waiting for the action when we started to fund pretty quickly. Actually, within a week, we had a new opportunity. And I said, okay, let's check him out. So we started to work with him and things were flying. I think we were landed within 2 weeks. I couldn't believe it. Within 2 weeks, the rates were higher than bank, but the convenience was so amazing for us. I couldn't believe everybody were polite. Everybody were quick. Like the emails flight. Paul, I don't think there was one time he didn't answer my call. It was like, I couldn't believe it. So we were very happy. We were very happy. And I think after one deal, we immediately did another deal with him within we actually would continue. But he told us, let's see how you're doing on those 2. I'm like, okay, well, no.
Paul sounds like a wonderful guy. Pamela, I'm sure you had a similar experience. And Susan, you should now start working with Paul.
Absolutely, no question.
So I
had a very tough year with 2 or 3 lenders over a man who was buying 2-3 families and 1 condo. And it took 6 months to close on them because the lenders were so crazy impossible.
I have to preface this by saying that Paul is an absolute OG hustler, like one of the most hardworking people on the face of this planet. And as Ella was saying, very persistent, because he has been, I didn't realize he's been trying to get in contact with me for years. And then like the one day I picked up the phone and called him, I was like, you know what? I want to give him a ring. I just want to see what's up. And like, we literally were on the phone for about an hour and a half. Like, not only, and I'm not just like, this is not just like promo for Paul. Like, he's genuinely not just an amazing lender, as Ella was saying and praising him, as a person, as a down-to-earth person who understands you and understands the situation. Like, he's just out of this world awesome, like not just on business, but on a personal level too. So I got to give my kudos to Paul. And, you know, it takes a great team to put these types of projects together to make the project awesome. Because yeah, you could deal with a bank and go for a lower interest rate. However, remember, you know, you got to go through all this red tape. There's time, there's this and this. As developers, you're like, I need my time. I need to build. I need to be in. I need to be out. I need boom, 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 boom. And he's got it. So anybody who's watching this and listening is like, how do I fund my real estate deals? That guy right there.
Oh, you got beautifully advertised by two beautiful women.
Oh, thank you. So that seriously means the world to me. I really appreciate all that feedback. Wow, I'm speechless. Thank you.
And anybody who's listening also, Pamela, I would like to add to your point, when you deal with the private lenders, your credit score is not as affected and not checked as often after what Ella mentioned, that you have a relationship with the lender who's local. Because I worked with somebody who was in Rhode Island, and it was impossible to create personal relationship. You just don't know each other. So I switched to all the local vendors, architects, finances. So Paul, tell us, do you work only with people in Massachusetts for the same reason?
So like I mentioned, I mean, we really think that real estate's local, and I'm not an expert in Rhode Island. I'm not an expert in Connecticut. I understand those markets. I've been there. I've funded deals there, but it's you know, we actually say that we invest in people, not projects. You know, and that's why I think it's really important to build rapport and understand their, you know, everybody's history and learn about their business model, where they're looking to go. It allows us to be a better partner. At the end of the day, if we don't understand your business, if a lender doesn't understand your business, how can they justify giving you a loan? Right? We're not here just to be a loan warehouse. We're not looking to crank out loans. We want good relationships with good quality people, because we give them the same. And, you know, I think, I mean, but yeah, I mean, again, it's a local ordeal, and I like to say that I'm an expert in the Boston area and within the 495 belt primarily, but I will do loans in Rhode Island. I will do loans in Connecticut, Southern New Hampshire, and some other markets nationwide. But I'm an expert in Massachusetts.
Thank you so much. Susan, you have an incredible experience on negotiation in real estate. People who are negotiating currently in trying to buy the real estate, which is really competitive right now, what is it that you would recommend to our listeners?
Well, first of all, honestly, I do not recommend that you go in alone without an agent to a sales representative, because they are represented by they are representing the seller, and they are only a facilitator for you if you come in. So you do not get sufficient information from the seller's agent in winning the deal. I've had so much experience with this and see how many people actually suffer from their negotiations. First of all, it's really important that an agent find out what the goals are of the seller. So number one, do they need to move immediately? Do they need to live there for an extra month after they close? You know, do they have time constraints? Do they have price constraints? Do they, do they have a family and want to work with another family just out of curiosity, because it's illegal to make a deal based on any identity of the buyer. But at the same time, it's really important to find out what you're dealing with. And in negotiation, there's always the escalation clause, which is an extremely important tool, I believe, in real estate. And for a while, we were asking agents if they wanted to, would they accept one? And now we're being told it's illegal for them to say no. And so, and they must present an escalation clause to the sellers. So therefore, the agent has no opinion anymore. So an escalation clause is extremely important. We've been focusing up to now almost 100% on developing properties. I think we also need to change the focus a little and go towards investing in properties, because many of you out there are wanting to be investors. And if you want to be an investor in the last 10 minutes, maybe we can talk about it a little bit, because investing is not always going to another developer and investing your money with that developer, although I recommend that. But there are other options. And one of the things I think, I agree with Pamela 100% about the towns that she likes. I have been in the business for 20 years and I've watched those towns. I have to tell you that very specifically, for example, Dedham never goes above a certain point. It flattens out, goes up again a little, and then flattens out. West Roxbury goes up and usually will dip a little, but goes up. Roslindale has an up and down curve, which is very inconsistent. These are things you have to keep in mind. And these are things I know from my experience. My recommendation to you in general is to stay, if you want to spend over $1 million or around $1 million, stay within the circle of Boston and do your purchasing there. However, it's really important to look at your commuter rails maps and at your T maps and look at where the towns are that are being expanded to with the T and expanded to with the commuter rail. Anything that has a fast commuter rail into the city is becoming more and more desirable. So this is something you really don't want to be ignoring right now, because for $700,000, you can buy a 3-family home outside of the circle. And that's often a very good thing. It doesn't mean that home is going to go up to $1 million in 3 years. But it's going to go up. It's not going to go down, because especially if it's in a college town or on a major route and very easy access to Boston, it's an important investment.
Thank you so much, Susan. So I have a question to all 4 panelists, and I think Susan answered partially this question. So I will go in the circle. Pamela, what are the 4 areas that you recommend for people to invest? What areas? Yeah.
The location. Yeah, I mean, you always want to follow trends, right? You want to follow, as Susan was saying, transportation, what's accessible for people's jobs. Are you near major highways? Are you near the commuter rails? What's up? That is very important, because most people spend their lives at work. I mean, now COVID's transitioned that a little bit, but you want to pay attention to transportation, local amenities. That's also very huge. And, school systems, for example, like Boston's
very
awesome.
important.
Boston's awesome, but their school system isn't the greatest. So maybe you might want to consider something like Dedham, but it really just depends on your strategy, right? Is this going to be a long-term investment for you? What's your game plan? Or are you going to renovate little by little and then rent it out and keep it long-term, because then you can write off depreciation and all kinds of awesomeness? Or are you going to condo convert down the line? I mean, there's so many different exit strategies. So here's what I want to tell you. Know your exit strategy of the property that you're going to buy before you buy it. Know that, right? Like if you're going to buy an investment property, buy it for long-term value. If you're going to buy it to flip it, know that from the day that you buy it. But what's most helpful is to kind of run your numbers both ways, because if one doesn't go that great, you have the other one to kind of fall back on. So always look at the different opportunities that you have there for sure. But transportation is huge. School systems are huge. And then also employment. Employment is also very huge. I mean, I heard something that like Brigham's was moving to Pembroke. They're building like a massive office building in Pembroke. That's going to drive Pembroke prices up. So that's the kind of stuff you want to be paying attention to when you're looking at long-term investments. And what's best, here's another tip, listen in on those town planning board hearings. Like what's coming? Buy it.
Can I add a tip to that one?
Yeah.
I'd like to add one tip to that, because when I show properties to people and they say, oh, I want to buy a 3-family home and I only want to rent it out. One thing I always say to them is, you're going to keep this home for 10 years. You may be, or maybe 8 years, 5 years, whatever you want. But why don't you consider buying one that is condo convertible so that later on, if you have the money, you can do a condo conversion, and the money that you will make by selling 3 condos is greater than the money you will make as selling a 3-family home. So my tip is to keep that in mind when you buy a 3-family, that it is a good condo potential building.
Right. It's a different exit strategy. So you always like, the more exit strategies and opportunities that you have, the better the investment.
Absolutely.
This is all very valuable information. I just want to tell everybody that we are recording this meeting and it will be available on Facebook and on YouTube. So you don't have to take notes, although these are very, very great points. I also wanted to tell you that we will be having more educational panels just like these, because I see a lot of people are posting many questions. People are very interested. This is a very hot topic. So I'm sure that Pamela and Susan and Ella and Paul, you will see more of them, and we'll do more workshops. The information about that will be coming shortly. So please stay tuned for Sky International Center's announcements on our Facebook, and soon we'll have the website to go with that. And I wanted to say hello to our member watching from Turkey. We are not experts on Turkish real estate, but if you are moving to the United States, especially to the East Coast, and he has a lot of friends here, these are the people to ask for advice.
Wonderful. And since we have, thank you so much, Olga. Since we have few more questions, Ella and Paul, whoever wants to go in a particular order, what are your tips to our listeners for the hot areas to invest? What are your predictions and favorite areas?
I can say, so nevertheless, I believe in cities. City the better, because so if you're talking about rentals, there is also short-term rental is a big thing. And again, they were talking in a conference that as time changes, people don't want to commit to too much for the yearly rentals. So the short-term rentals actually the best way, one of the future ways to rent furnished places as a short-term, even monthly rental. That's going to be coming more and more. And again, you need transportation, you need to be close to Boston. So our favorite areas still is Boston, Winthrop, Riviera, Everett, Chelsea. So close to Boston. I had a very good experience with Airbnb. I have 9 units right now. Even during COVID, they are fully booked. I didn't have one free day without them, so they were covered. I didn't have any non-payments because all people who come in, it's all short-term, either facilitated through Airbnb or nurses, and I really didn't have one case of non-payment, while the regular renter lost so much because of non-payment. Mm-hmm. So this is really very good model to do, but it's doable, again, very close to Boston. So multifamilies in Boston, Riviera, especially Riviera now with the Suffolk Down, also picking up very nicely. So this is upcoming areas, they're growing, they've been growing, they will be growing. And at the same time, I can speak for Boston, for example, they became somewhat anti-development. So whatever the condos you have, this is what you get. So this year, there is a lot of condo development, but pretty much after that, it's going to be stopped because nothing is going through. So again, what it means, it's going to grow because there will be not many new development facilitated unless they really change their mind, but they became very anti-development at this moment. So this area going to continue to grow. Is Boston going to grow? We are growing like crazy, and still affordable, still with a very beautiful ratio of renters, especially if you use Airbnb or short-term rentals, but even in a regular rent, it still give a wonderful cash flow. One of the best. So this is
thank you, Ella.
Areas.
You see you're passionate about your areas. Absolutely.
We
Paul,
just have a few more minutes left.
Yes. And Paul, since you have some questions from the members, Olga?
Yes, I will have a few questions and then let's close. Somebody asked about 1031 exchange tax benefits. That's a question for Susan.
Well, I would say that all of you are going to run into this. There are theories that if you buy a property a year for 10 years and after 2 or 3, you start selling one, so that each year you add one, but you subtract one, you're going to be making quite a fortune at the end of the 10-year beginning thing. You can continue and continue with it. So 1031 exchange is wonderful, because I'm sure that Paul will add on to this, but you have 45 days before you sell your property to identify a like-kind property. And when you identify that property, you then have 180 days to close on it. So you have time to find another like-kind property so that you avoid paying taxes on your original property. And this is the most important thing with investment. And I think one of the things I haven't been able to say, but I think is so important to us, is this is a lifetime career you can do in buying properties, getting a little bit of income from these properties. And if you compare them to stocks, which are dividend stocks, you make far more money on the profits you make in an investment property. So the 1031 exchange is another benefit that you would want.
Absolutely. We all, yes, going hello. Yes, absolutely. I particularly love 1031 exchange, Susan, not only for the reason that you mentioned, but also for the great tax savings.
That's what I'm saying.
Legal way.
It is a total tax saver.
You pay 0. That doesn't mean
Right.
that you don't pay in the end of the life. However, when you die, you have to either transfer the taxes to your family or find another way. But I think we all agree that 1031 exchange is an amazing program. We also, guys, will have in the very close, in the near future, the next one is financial educational webinar, and after this tax webinar. So it's a smooth transition from real estate. Paul, I don't want to forget you, and I would love to ask that question from our members that came yesterday. So what is your opinion on the best hot areas to invest in Massachusetts? Since you're a financial person and you see where it's going.
And that actually ties in with another member's question. George Svedlov asked, what do you think is more likely to do better over the next 3 to 5 years, urban areas or suburbs? So if you can answer these both in one answer, and thank you.
Sure. I mean, I think Pamela, Ella, and Susan have all touched on it, but I think, you know, when it comes down to real estate investing in general, just making a generalization, it's definitely local amenities, definitely highway access and easy transportation. Those things are very important. And obviously watching job growth and where larger companies are starting to get a foothold in certain areas. Those are definitely things to watch over time. I remember when I was younger and Somerville used to be called Slummerville when I was a kid. And you know, you see the planning boards coming up with this entire plan for the Porter Square, Davis Square, Union Squares of the world. And it's become such a dominant market, and it's mind-blowing to me how strong of a market Somerville and Cambridge are to this day. You know, it's just watching those things, and obviously like they all touched on, those other amenities associated with, you know, being in specific locations. What I have been seeing a lot of, to be honest with you, and this might surprise some people on here, is that Realtor.com is actually labeled Southern New Hampshire as the top 3 hottest real estate markets in the country. And 14th on that list was Worcester, which is mind-blowing to me. A lot going on out in Central Mass right now. I'm not a huge fan of that market, but there's a lot of money to be made. And so if I wouldn't take this as investment advice, I would do a lot of due diligence before me advising anybody on investing in Central Mass, but it's super hot right now, and so is Southern New Hampshire. I'm still a major fan of the greater Boston area, huge fan of it. I personally, if it came down to me, I'd never go outside of it. This is something where there's just a lot of money to be made, and it's sustainable, and you don't have to worry about, I mean, it's very densely populated and just so much to do in the city. And when it comes to urban markets versus suburbs, I'm still a huge fan of urban markets. I think once these vaccinations get completely rolled out and restaurants completely open, people are going to flood right back into the city. I think we're going to see a nice little boost in condo prices, in all honesty. I know they've been somewhat stagnant recently, but I think we're going to see that jump up a little bit as soon as everybody just realized. I mean, I've heard from other realtors, honestly, throughout the last year that, you know, they've had some home buyers contact them saying that, oh man, what did I do? I made a mistake. I shouldn't have moved to the suburbs. There's nothing to do out here, you know, and a lot of people want to be back in the city, to be honest with you.
Yes.
And I think same goes for office. I think people are gonna, at the end of the day, you want that team camaraderie. You want to be around people. It's lonely being in your home office 24/7. At the end of the day, it's not good for psychology. This isn't necessary. I think that all translates to real estate, and I think we're going to see a nice little influx into the city, back into the city at some point. Don't know when that is, but I think we will see that.
And to sum it up, guys, to respect everybody's time, I'm so grateful. And Olga, I could hope we can speak from both of us that we are grateful for your participation, and all of you guys, an amazing group of people that we are absolutely invite every member to collaborate with you, to contact you directly. And we hope that this is a great collaboration for people to team up even more, just like all of us worked already in the past. And I am a great believer, as you know, in real estate. I would not be able to have a chill time during the COVID if it wouldn't be for real estate. I actually encourage every single friend, like Ella, I encouraged so many years ago to join a real estate, but it has to be your passion. As we all know, once when you get in, you know, if you're listening, if you're tuned into this workshop, something is holding you here. That means it's telling you this is your time to invest. And there is no wrong time to invest. Just like Paul said, that Somerville used to be Slummerville, now Lynn, City of Sin. It's all gonna change the landscape because, like Ella said, there is no way to go up from the ocean, but to go inland. So let's keep building beautiful homes. Let's keep investing and helping our clients. We're so grateful to have you. I'm so honored for each of you joined our team. Guys, love you to the moon and back and to the sky and back. Good night.
Good night.
Wonderful seeing
Mutual.
everybody. Thank
Thank
you
you.
so much. It was